Hello friends, good afternoon. This is Rajnish Mehan, Executive Director and Chief Investment Strategist from iPrudent. We have us Mr. Sunil Subramaniam, who is our strategic advisor. He'll be talking about markets in the current scenario after Mr. Trump had increased his tariff from 25% to 50%. And so we will understand about its implications, on the markets and mutual fund investments, which sectors are going to, benefit and which sectors are going to have a negative effect. And we'll also understand, what should clients do at these times, whether SIPs or lump sums or, one-time investments or staggered investments. So all these, which type of funds, we have a lot of queries. So Mr. Sunil will help us, navigate the current scenario. Over to you, sir.
Thank you. Thank you, Rajnish, and good day to all of you. So as Rajnish mentioned, right, the hot topic of the day is the 50% tariff. So first I want to talk about that in the sense that it's not 50%. So why do I say that? I said you got to look at this tariffs as two 25%, because the first 25% which was announced on 31st July was the result of the failure or the extension of the trade talks between the two countries. So that was an economic decision on tariffs. And the hope was that the US team was to visit on the 23rd of August for another round and that it would get resolved and that 25 may settle at closer to 18 or 20 wherever our competitors are. So that was the basis on which that happened. And knowing Mr. Trump, what he had done with Japan, where again he had announced unilaterally a 25% tariff. And then after the trade talks, it came down to 15%. So while the news of 25% was a shock because we thought the talks were going well, knowing Mr. Trump's actions, and there's in fact the memes have framed a word for this called taco. Trump always chickens out. So there was that kind of a expectation that okay, maybe it gets postponed by a month, and by September 1st, after these talks, at least some interim deal would come, which would be taking it forward. So that's one. Second one of the second tariff, which I call a political tariff. The first one is an economic tariff. Why I'm saying this is because India is not important to US. We are only a 50 billion trade surplus. He is using us as collateral damage in the fight with Russia. So this second 25% actually has nothing to do with the economics or the trade barrier or anything.
That's because of Russian oil that we are importing and all.
Bring Russia to the negotiating table because India and China are the two biggest buyers of Russian oil and we buy Russian defense equipment. So he feels that if he puts pressure on India not to buy from Russia, Russia would suddenly, their economy would weaken and they would come to the negotiating table, right? And why is Russia, Ukraine so important to Trump suddenly? I mean, he's already been there so long, right? It's because that I think that he wants to win the Nobel Prize by solving the Russia-Ukraine war.
Yeah, okay. it's ego, I think, playing. One is Nobel Prize, and he's already told Putin to stop the war, but he's not doing it. So I think that now the ego is playing.
Correct. So where I'm coming from, the second 25% would
get this once this comes on table and what we are hearing about the Russia war. So if I think that's also this 25% will go off.
Exactly. So I'm saying the second 25, let's not worry about. It's a factor completely out of our control. No amount of negotiation by India is going to solve that because we can't stop buying oil from Russia, because if we stop that, oil prices will shoot up. Because India has to buy that oil from somebody else, right? So the demand supply would get horribly wrong. So clearly this is not a sustainable thing, right? So while it might cripple Russia, the fact is that oil prices will go to $120 in no time. And the whole world will suffer, including the US. So it's not a. So I feel that 15th August is the slated meeting between Mr. Trump and Putin. So hopefully some solution will come out of it, and this 25% can go away. Now the core 25% there is a red line, but there is still, India still has some, like for example, we can buy oil from the US. We can agree to buy F-35 planes from the US. So somewhere a Y media can come. So I'm reasonably optimistic that they can keep the red line in abeyance for a future discussion and say, let's move forward with some kind of a thing. So in my view, this tariff thing today, it looks like a very difficult thing. But in the medium term, I believe that the two countries will come to a pragmatic decision around it. Okay, so that's the thing. The second aspect, now we come to our markets and this, right? So first of all, if you see, our exports to the US are only 2.5% of our GDP at $87 billion. Right. So overall, from a absolute impact to the GDP, it's not dramatic. There are various brokerage houses from international who have tried to assess this 25-50% impact. What I've seen is it starts from 0.2 to 0.3% to maximum of 1.2% in terms of GDP growth. The worst case scenario is 1. So I'm saying that even at there's a 6.5 growth rate, in worst case it will come to 5.5 or 5.3, which will continue to make us the fastest growing economy in the world. So while it will impact
Right.
our growth, it relatively to that extent, but on the stock market also I want to point out. See, first of all, if you see the tariff order, so pharma, software, and electronics are currently out
Yes.
of the purview of the thing. So 4.8% only of our exports is impacted by this tariff, right? So first of all, so overall, it's not going to dramatically alter the country, right? Unless this is going to be a continuing feature. Because see, India's future growth prospects obviously relies on us attacking the US market as a consumption market, right? Because for the long-term growth,
Right.
US is too big a country. It's about 35% of the world's GDP, right? So obviously, over the medium term, we need the US as a market. So there has got to be a solution, a pragmatic approach, and that's where I would compliment that despite the use of very offensive language by Mr. Trump, our government, whether it's external affairs or trade, has responded in a very mature fashion to this, saying we will talk, we will solve it. So I think end of the day, emotions run high in the general public, but I'm happy that the government is taking a very pragmatic approach. So my confidence lies that we will ultimately reach a solution. And what do we need as a solution? We need 25 to go to 18 or 19 so that we have a level playing field with our competitors. We are not seeking zero tariff. We are not seeking any other thing. So I believe that in the medium term, this will get resolved. Today, it looks very tough, but it will get resolved over the period of thing. The second, one more date, which is from an immediate perspective is important, is the 12th of August. Because what has happened is China actually imports more from Russia than we do. But he has not acted on China in this manner because there is a
Right.
90-day pause which comes to an end on 12th August. So before the
August.
15th August meeting with Putin, there is a 12th August deadline where let us see how he acts on China. Because if he's going to do something to China, that will be even more damaging for Russia. So we'll have to wait for it's only a matter of a couple of days now, right, to
So
see
that
how
could
he acts on China.
that could benefit India, right? If it's higher,
Uh,
China's tariff is higher, there also he imposes.
yeah, I lost you there, Rajnish. I think there's something wrong with the connection. Can you repeat?
If he puts up a 25%, that will maybe bottoming out ground for our markets.
No, I know that, but Mr. Trump is so hard to predict. So I don't think it's better to wait for 2 days rather than take a call on that. So then, from
So
what happens,
let's understand the scenario. Let's
Hmm,
understand scenario. But let's say
hmm,
the 25% remains, and
hmm,
he's stuck on that agriculture. If you're not allowing me, it will be 25%.
hmm.
So you think the market impacted, only they might stay down, but otherwise the market will at least bottom out?
Yes, yes. See, I'll tell you one
Because
of the
right
things.
now overall market is
So what happens, Rajneesh, is there two, three things I'd like to point out here on this matter. There's one is that, see, the FIS had started selling right from the beginning of the month. So they got a sense. See, the
right,
reason they started selling, among many other factors, was the uncertainty that the talks are stretching and not coming to any conclusion. So, to the extent that on 31st July, he
right,
actually
right.
came and said 25, the uncertainty element goes away, right? So, clearly, okay, acha, which sectors are these? Because this 25% tariff is on 2.5% of our GDP, which is exported to the US. And within that, there are clauses. So, which means that is your clarity that which are the safe sectors I can invest in, which not, because, and you correct the overall market's valuation to the extent of that the GDP is going to slow down, right? So, once you factor that in, then the rest remains for you to deal with it. So, it is the uncertainty which is more killing than the actual 25%. Because this
Right.
25% also, if it remains at 25 also, government has two, three tools in its hand to counter this. First is currency depreciation. See, by allowing the currency to depreciate to, let's say, 90 or 92, we can take care of this 25%, the difference between other
You
countries.
benefit the exporters.
Yes, that is one thing. Second is we can give concessions through export duty, export financing, right? In a much more cheaper way. Reserve Bank can allow more cheaper financing as a subsidy to the exporters, to which they can counter this tariff. That is the second one. Third is, of course, is the gray area where our exporters can manufacture a bulk of the product in India, but finish it in another country which has a lower tariff, like UK, for example, has zero. With, so India versus UK is zero, and UK versus England, this is also only 10%. So some such roots of some things can be found out unless they go behind saying source of it is India, so I'll still put a tariff. So that's a gray area, but it can be to some extent exploited and countered. So I believe that the 25% is not really a too much of a damaging thing, right? To that extent. So with over time, the government will readjust that. So then from a market perspective, if you now take this whole tariff situation and look at the market situation, see, two, three things are very important to judge here. FIIs, they came in for a short period between April, May, June, right? And then July, they again, what they sold in July was the entire thing they brought in April, May, June. So April, May, June also very thanda inflow of the FIS. FIS have
Right.
really strongly invested in India ever since last September when they started selling. Okay. It's the DIs who are driving the market. So what I'm saying is till this tariff uncertainty gets clarified, FIs are still going to be very watchful of coming to India. So in order to decide where to put my money, it's better to look at what the DIs are likely to do. Okay. So because they are the ones who are protecting the market from further fall.
Okay.
To really rise, FIs will have to come back. So why I'm saying this, I see a period of consolidation for the markets because until the FIs clearly come back, right, the market for it to shoot up because DIs are already deploying what they can deploy. The cash balances of mutual fund, which had gone up to 7%, 7.5% as of March, were already down to 5.25% in there. Not that, so even today we just saw the data, but 45,000 crores is the net equity inflow for this month of July that the MFs have got. So clearly MFs are still sitting on money. They will continue to protect the market, but they'll be very sector specific in their allocations because where there is uncertainty, they would also like to avoid. Right? So obviously the question
Right.
arises
Right.
that when you then go in as an investor, there are
So
two
which are the
choices.
sectors that?
Correct. So clearly
Yeah.
the one thing you're going to see is that domestic fund managers are going to seek less volatile sectors. Number one. Number two is that they will still be very careful in deployment because as of date, only 270 companies out of the 3,000 odd companies in the stock market have reported the results. Right? So a lot of large caps have reported, but in the
Right.
broader market, there's still a lot of earnings season to go through. So they will wait for the earnings because they will take stock specific, sector specific calls on each one. Right? So that's one thing to remember. So I would say that obviously they are going to be buying purely domestic oriented sectors. And the three big sectors which come to mind here are BFSI, the whole overall broader BFSI, the consumption sector, as well as the capital goods sector, right? So these are the three sectors they are likely to search for good. So export oriented sectors like I will come to the big one later. I'm talking textiles, leather, gems and jewelry are something they'll be very cautious about because you've got to wait and see how the situation pans out. Another
Right.
one, the big one, which they will be going to be cautious about is pharma. The reason is pharma is today exempt from this 50%. But Mr. Trump's speak has been very, very negative to pharma. So first he's been saying, I'll start small and go to 250% in
Yeah.
tariff. Second is he's actually written a letter to all the big
250%.
pharma
He's already
companies
given it.
saying, "Hey, you reduce your price." He's saying that unless otherwise I'll put tariff, you yourself reduce your price. So clearly the outlook for
Right.
export-oriented pharma
Right.
is not clear. So I would say then I see domestic fund managers
Hmm.
look at domestic hospitals and diagnostic within the pharma space and being very cautious on the export-oriented pharma, whether it's generics or CDMO. Both they will stay cautious. The third is IT. Now, as we know, IT, the whole tariff is not about services, it's
Right.
only about goods. But IT itself, over the last year to date or 6 months, whatever you take, I think has been a 25% underperformer to the IT index. Now, clearly, that's because there's a lot of negative news
Hmm.
about IT in the news. Right? What are the news is, oh, US companies are fearing the tariff impact and they are slowing down their IT buying and orders. Second, AI is coming and transforming things. So everybody is conscious, and the IT industry is suffering. As you saw, TCS said, "I'm laying off 12,000 people." Though he didn't admit it is due to AI, market is reading it otherwise, saying it is really AI which is driving. So there's a lot of negative news around the IT sector, but I am a contrarian here to the extent that for me, IT as a sector, it's the bulwark of Indian services industry. If at all India has had a good growth in services over the last, it's been IT. And to suddenly to say that these companies will not be able to adapt and survive and grow in this new, like a Y2K like moment is upon us. So I have a faith that after a short period of this, they will bounce back. And hence, I believe that there's an oversold condition. It's all the bad news is in the price, but not all the bad news is fully bad. And I believe that that sector is poised for a comeback. So if you as an investor have the ability and the risk appetite to take some more corrections and some more volatility over the next few months, I believe that buying on dips is a good strategy to adopt in an IT sector fund. Okay, and I would
No,
say
we have
not
been
to buy don't buy a passive Nifty IT index, because 70 to 80% is only the large cap IT companies, whereas it's your mid cap IT companies like a Coforge and this right
that will do
persist,
better.
which are the goings who will
But
see. For them, AI is an opportunity, because when the industries in the US are suffering the impact of AI, somebody needs to do AI consulting to them. And I believe the Indian industry will rapidly go and adjust, and the smaller and mid-cap IT companies are probably going to be better off. So, an actively managed IT sector fund would take a good mix of
good.
mid-cap, small-cap, and large-cap IT companies. So, I would say that
Okay.
if you have the trigger, to use a Hindi word, right, then buy on dips, do a systematic investment plan or a systematic transfer plan over the next 3 6 months into an IT sector fund. Be prepared for continued volatility, but these will probably be never better times to buy IT from a mini term perspective, right? So it's a contra call. Let me be clear. And next week
No, no,
itself,
I think you're
but
right. See, I've been speaking to a lot of fund managers, from LIC. Today also I spoke to a fund manager, ICICI. They have all started increasing their allocation to IT. So they are also seeing that it has underperformed. So
yes,
slowly they are, started moving to IT sector. But you are right that instead of going passive, it's better to go with active fund management,
yes,
for IT. So this is
yes.
like, okay, sir, sector calls. And
Ah.
but what about, do you think one should go for lump sums as of now, or SIP, or like you said, systematic transfer plan, even for, category wise like multi-cap, flexi and all?
So let me address the cap curve situation before I come to this, Rajnish.
Because
Right? Talk about the sectors
जितना
I
अभी तक
talk about.
मतलब जितना अभी तक अर्निंग्स आया है, what do you feel? Still large cap is better, or mid cap to small cap also, they are performing better?
No, actually, if you see, mid cap is best performance in terms of the earnings so far. Selectively in the small caps, there have been good performance, and large cap has been largely at a 10%, 9 to 10% only profit growth.
Mm-hmm.
Yeah, actually, mid cap has done better. The issue is that the valuation of mid cap are at 32x versus 21x for large cap. So, what is needed is a much better outperformance from mid cap than what has been shown. So, it's still from a relative to that kind of valuation, the mid cap performance is not that good, though it has beaten the large cap in terms of profit growth. So, no, but my point is very simple, Nish, is that when you look at the fact that I said a few minutes ago, right, the DIs are driving the market. Now, if you look at
Right.
the money the DIS have, 50 to 60% is mid and small cap like money. So,
Because the
the thing is
money
that
is coming only to those sectors, na?
exactly. So they can only buy the money they're given. SEBI has made sure of that today. No. So what I'm trying
Right,
to say
right.
is that today, so two, three things here. So for me, the best category of fund today, I believe two categories you should hold. Okay, and I'll explain that. It's multi-cap and multi-asset allocation.
Multi-cap and multi-asset.
I'll tell you why. So first of all, if you look at, let's take step outside India for a minute. I think the way Mr. Trump is going about it, he's already started replacing the Fed's members. right? I think a rate cut is on the way because the new Fed members are already talking about rate cuts. So, in fact, until the market was hesitant about two, some Fed governors said we should do three this year. So, why I'm saying this? So, if the rate cuts happen, right, then that's a big shift for two things. One is it will mean more money towards equities because the dollar weakening, more money towards emerging market equities. Second, with the dollar weakening, it also mean gold will get a leg up, right? So for me, then, so from that point of view, it makes sense to keep an allocation of gold stroke silver in your portfolio, which can happily happen through multi-asset. Now, if you see the most multi-asset funds, they can't do more than 20% in commodities because I think that they'll have to keep the taxation, equity-oriented taxation in mind and sub to play it properly. But
हाँ.
their exposure in equity will be largely large cap. So what I'm trying to say is, आपका मल्टी एसेट फंड से एक लार्ज कैप एक्सपोजर भी बन जाएगा और आपको कमोडिटी का भी मिल जाएगा. So now to
तो
blend
सर डोंट
that,
यू सी बट डोंट यू सी दैट इफ ये यूक्रेन रशिया का वॉर बंद हो जाता है तो गोल्ड विल सडनली सी अ करेक्शन, क्योंकि
नहीं
वॉर
सी
की वजह से भी थोड़ा सा तो था ना ऊपर.
नहीं सी वॉर की वजह से था मगर आप देखें तो the driver behind gold prices has not been the uncertainty as much as the decision by the central banks of the world to de-dollarize.
टू
That
डीडॉलराइज
war is going
गो
to
फॉर सेफ.
continue, especially with a weakening dollar. With a rate cut, interest rates will go down, dollar will weaken. So एक
अच्छा हाँ
अनसर्टेनिटी
राइट.
प्रीमियम होता था मगर दूसरा है कि एक्चुअल बाइंग बाय द सेंट्रल बैंकर्स. इवन रिजर्व बैंक 8 to 10% they have bought gold.
So that
So
will continue, that you're saying
that
will
will
continue.
continue. That's what I'm saying, right? See,
So the dollar weakening will also have a positive impact on Indian markets, right? Because then the FIs will come in.
yes, yes, correct. So that's where I'm saying that multi-asset makes good sense because the FIs come in, they'll buy large caps. Right? So that way, multi-asset gives you good large cap exposure to this. Now, to blend that, you can't be going zero on mid and small cap. So a multi-asset fund, which has 25% in small and 20% in mid, is a good blend to have with your multi-asset fund. So multi-cap with multi-asset means को आपको overall उधर भी large cap इधर भी large cap एक large cap का allocation आ जाएगा एक gold silver का भी आ जाएगा and then you will get some small cap and mid cap.
Even small cap
Correct.
also.
And the fund
Right.
managers will choose which sectors to put in that respect so that you can leave to them. So I believe that's the right combination. But even there, I would say you go through the STP route.
Okay.
The reason I'm saying is that fund managers, when they get the money every month, this month they will deploy in one way, next month they will deploy in another way as the earning season comes through and your festival season coming through. So I'd say that the volatility in the market will continue. There is not much of a downside because of domestic liquidity, but the FII thing is so uncertain in terms of when these things trigger will happen that
Right.
stacking the approach at this point makes better sense than putting everything in lump sum, right? That's the only thing. So I would say that whether you're a moderate investor or a aggressive investor, it's a good time to stagger your investments at this point in time, right? And I wouldn't say you have to go too far out. I don't say more than 6 months.
Three
STP
to
is
six months.
3 to 6 months is more
Three
than
to
enough.
6 months STP is enough because anyways their SIP is staggered. So SIPs is
Yeah,
will be anyways month on month going on. So lump sums you're saying we should stagger over 6 months. So that would be
yes,
a better strategy.
a better strategy.
So because the market will take care of volatility, and also I think earnings also everybody's expecting that second half will be good. So by that
Yeah.
time, you accumulate good number of units, and once the earnings are good and this thing settles, the uncertainty, I think the markets will start looking up.
See, also, I believe that around October middle, I expect the FIIs to come back. And I'll tell you why. It's a very silly reason. The reason is
Mhm.
it's called as a crossover. This is a crossover quarter, right? Where the numbers are indicating that they're on a U-shaped recovery. But in
Right.
October result season, the market analysts start discounting FY27.
Mhm.
अभी तक दे
Yeah,
आर स्टिल
October they
लुकिंग
will
एट एफआई
start.
26. तो जब वो एफआई
26, हाँ.
देखते तो एडिशनल इवन 10% नॉमिनल जीडीपी का ले लिया तो ऑटोमेटिकली वैल्यूएशन 10% सस्ते लगेंगे. तो इंडिया में नॉट लुक सो अनअट्रैक्टिव. सो एफआईएस विल स्टार्ट लुकिंग एट इट फ्रॉम दैट वन and comes through. So I believe that's a
Yeah,
sweet
you're
spot.
right.
So I'm saying do it that way. So I treat it as a crossover quarter. सो इसीलिए एंड बाय मिडिल अक्टूबर यू विल गेट अ सेंस कि दिवाली का स्टॉकिंग कैसे हो रहा है, हाउ द ऑर्डर बुक्स आर बिल्डिंग अप, एक सेंस आ जाएगा ऑफ द फेस्टिवल सीजन बिकॉज गणेश चतुर्थी वुड हैव गॉन बाय एंड दुर्गा पूजा आल्सो वुड हैव गॉन बाय, ओनली दिवाली विल बी लेफ्ट व्हिच इज 23rd October. So you will get a sense of the festival season ka mood. This big billion sale by Flipkart or Amazon, ye wo, you will get a good mahal. So I believe that mid-October, I sense that there could be a good trigger for with the rate cut being announced in September in the US. So all things could come together. So I believe that that's when if the FIs come, what will happen is you'll see suddenly the spike up because we need that trigger for the markets to take a decisive move up. Because just on domestic buying, the market is not going to be able to move up. Because what FIs are buying, the domestics are buying. FIs are selling, domestics are
Yeah, yeah.
buying.
If we want a new high, then we need FII money to
FIs
come
to
in.
come.
They will drive.
Yes.
That's there. Right, sir.
Right. I
Thank
think
you
we
very much for your
covered
time as always. Very
yes.
inciting session.
Good.
Thanks a lot. We'll get back to you again. Let's see. What he does on 12th and what he does after the 15th meeting. So based on that, we will do a next call.
Sure, sure. Happy to do that. Thank you. All the
Thank you,
best.
friends. Thank you. Thanks.